The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technician on the 10th day of March. My pleasure to be here. Fabulous program up until now. What a day, what a day. So let's just look at the numbers. Well, first of all, let me say that the E-mini is down 6 at 1983. The E-mini went to 2010.25, and had a plunge all the way down to the low so far of 1979. Let's call that 1980. So there's 20, that's 30 points. Bam, just like that, in an hour and a half, 2 hours. Not bad. So the big problem here is that this is a leg E in the daily. So let me go through a couple of things one at a time. I'm going to make a slight change to what I want you to do. Why? Because in our long positions in the Dow, we got taken out for a really nice gain in two positions. So now we've got to rethink the whole aspect. We did not go short. I almost thought if we get taken out, immediately switch to the short side because that was very important support. But at the same time, the day is young, number one. And number two, I still have some very strong technical indicators. And it's the same as when I'm looking at gold. I expected gold to at least have a bit of a pullback, what I call a high-level consolidation. It's in that high-level consolidation area. So let's go through this very carefully, very slowly. One of the things I'm also looking at is for my subscribers, we've gone into commodities more than I can ever remember. And they're actually holding very well. The day is young. It's a very important session. In fact, I've been talking about March going into the beginning of April as probably being the most important, for me, period of the year. That includes the whole of 2016. And it goes all the way from the technical picture to the finery, to the sartorial elegance of Downton Abbey. Why? Because that was the 1920s. And you know what I've been talking about? Oh, what happened here? And I've been talking about the similarities for over a year, well, more than a year, but certainly this time last year, in February, I had my webinar and I discussed that I was anticipating we would have Elliott wave 4 to the downside in the Dow. Well, the Dow did come down 16%. And then there'd be a rally. And that rally is going to be the rally that determines whether or not the Fed is going to be forced to keep rates low. That's why today was so important, to just really be pummeled into the thinking that the economy is not doing that well, that you've got to do something and you better not raise rates, because that's about the only way that I think you can get a real stimulus, unless earnings of companies come on so strongly that it triggers a whole new buying spree. Because how else could you go to 18,500s in the Dow? 18,350 was high. So let's go one step at a time. E-minis come back very nicely to minus 325. In a way, when we got stopped out of our long positions, even though I raised the stop quite a lot, I was a little upset because while we're in D and E in the different daily charts, the technicals are still really strong. However, a profit is a profit. You can always get back in, and I suspect we will have a nice entry point a little lower down. So now let me go through this. See the 120-minute chart made a perfect peak E at 2010.25. For those of you who are trading, let me just show you something really quickly. The Chapman wave projections are 2010.40 on the E-mini, and the high was, of course, this doesn't go in 25-cent increments. It does not know that we're trading in E-mini here. It goes to 2010.40, and the high was 2010.25. There was support at 1887.80. It had a very nice bounce, and it came back. Next support was at 1984.50, came back. had a bounce to the 200-period moving average, and then it came down to the next level. 1979.18 is the support. The E-mini went to 1979.75. I'm still working on the March contract here. So what we're looking at is a situation that says the pullback was sharper from the 200-period exponential. This is the 10-minute chart, sharper than one would like to see. Therefore, it's still going to act as a repellent, not a propellant from the bottom or magnet. There's still that sense that now you have to treat this line as a repellent line, because until you close over it again, it's going to have that force that's turned the magnet into a repellent. That's all. Reversed, you got to be careful. Look at the MACD and stochastic. So this 1979 level will be really important support. 1991 will be very strong resistance. That's quite a bit higher up. I would actually say 1986 50s where you got to note any strength. All right, let's finish up with that. Now let's run the numbers. Dow, INDU, made a leg E, and the leg E went above 17,099, but just nominally so, and we're underneath it. The MACD is flattening out. Stochastic still very strong at 89%, but has turned down. The on-balance volume didn't confirm the rally, and I have another indicator inside here that says, be careful, because there should be a testing of the 16,895 level, which is the 9-period exponential moving average. And the upside at this point is limited to 17,157. We hit 17,130. Put a little red plus sign there that says be careful. There could be a turn down right there. Yes, there could be a recycle, could be an instant restart. This could be E/A. But at this point, I'm just going to treat it as an E. That's the way it works, because it has a rogue wave F. You see this? Sorry, rogue wave G. It went to F in the Dow 120-minute chart, and that was at 130 yesterday, a couple of days ago, at 17,099. And then you have that one-day spike. Now, it's worth taking a moment here. Now, let me do the numbers. The Dow is down 50. S&P is down 3 at 1986. The comp index is at this particular point down 13 at 4666. If I can just move this down a little bit. There you go. We've got gold up 8 at 1266. Silver is up 17 at 15.54. Platinum is up 4 at 983. High-grade copper is given back some. It's at 221.15, down 2.15. Crude oil is down at 37.58. And bonds are down almost a point at 161.30. Not bad, actually, when you consider what's going on. And I just want to check on the dollar. The dollar at this particular point is down 70 cents at 96.45. So now I'm going to go back. In the Chapman wave technique, the methodology that I work on, it took me years and a lot of money to find out that there's a particular pattern that I call the rogue wave. You know, when you're at the beach and there's a sign that says high tide at noon, and at 12:06 you decide you're going to sit on your favorite rock right on the edge of the water there. You take your book, you take your sandwiches, you take your blankie, you got your suntan lotion, you got your dark glasses on, and as you're about to put everything down on the rock, splash! There's this. You look around. What happened? By the time you wipe your eyes, the tide's going out. You don't understand what's going on. That's a rogue wave. It didn't see the sign at the beach that said high tide at noon. At 12:06 it went, and there's your 12:06, and the tide just continues going down. I'll talk a little more about it when we get
back. The economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced experience and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So let's just go a little bit further into, I was asked about this Rogue Wave, Splash Rogue Wave. Let me make it a little bit bigger here so that you can see it. Basically what happens is, and it all happens very quickly. It usually happens in one bar, whether it's a 120-minute bar. In this case, it's also the daily bar. What happens is the pattern itself starts to show that there's been a decline from usually a peak E or an F. Could be a D, but it's usually a little bit further along. And then the price goes down, and then suddenly it flattens out, and it looks, based on the 9-period exponential moving average, that's the black line there. This is the Dow 120-minute chart. And the MACD starting to expand. The distance between the 9-period differential, the green line, and the slow-moving average expands. And then the stochastic just keeps going down, down, down from, in this case, the 90s, down, mid-90s, down to the 30s. Well, what happens is there's that one moment, it's usually a news-related thing. It could be anything, but it's usually news-related. There's a sudden spike. The price goes above the previous high that gave you the sell signal, in this case, 17,099.25 at 1:30 on the 7th of March. And then all of a sudden you get the people that were shorting saying, oh, no, I knew I shouldn't have done that. And they cover their shorts and they go long. It usually hangs around long enough, just long enough for people to start thinking and rethinking and overthinking. They get out of their short positions, if they have, and they go into new long positions, or they've taken off the money before at what they thought was a toppy area. And because it's gone higher and the news seems like it's going to be fantastic, they grab it and they go long. That very same bar, invariably it's the same bar or no more than 2 bars later. Not only is the price way below where it was when the whole thing started, But the MACD and stochastic don't even know that there was an upturn. And look at this. If you were looking at just this configuration down here, you would not even guess that there was a move that went to a new recovery high in whatever it is we're looking at. In this case, it's the Dow. Dow's down 90, S&P's down 8. So we are out, did not go short. I'm a little upset because there was a particular vehicle that I wanted to go short. I waited one more day. I thought there'd be tomorrow or the next day would be an opportunity to get it. Did not. It's had a very nice percentage move. Hey, it's okay. There are plenty more trades. This is telling me very strongly that the 200 period exponential moving average in the Dow, which is at 17,045, is now going to become even more important. And the trading is based between the 9-period exponential moving average, now that 9-period moving average is around about 16,890. And my suspicion is we will take it out. 16,789 to 16,694 will be the containment area. I believe it's a containment area. I do not think that we've made the top here. I would not be surprised if we struggle through to the upside into next week, where at the same time, the Fed is going to come out with some whatever. Okay? Now, when I talk about deflation, I'm talking about, in a sense, we're looking at competition. The competition between countries to vie for the lowest yield is going to be very strong. Even now, we're looking at the TLT trading at 128.27, down 92 cents, but kind of stuck in a range. Let me get out of this and I'll show you exactly what I'm talking about. I think I've covered. I'm sorry. I don't want to move on. I had questions. I promised I'll deal with them. Tesla's number one. I don't know actually what Tesla is. It was just a question Chris asked. Hi, Basil. Wow, what a morning. I'm ready for a nap. Would you please look at Tesla? I read the daily at leg F. Absolutely, F/B, but a lot of the evidence at this particular point says that if Tesla at 204 down 467 takes out 198, closes below 198.43, absolutely you have to consider it's an F. But at the same time, the MACD is strong, stochastic strong in the daily. The weekly is just another single leg A up in my work, and the monthly is saying Tesla is making lower highs and lower lows. This is a counter trend bounce. It did not get to the 200 period moving average of 215.78. But at the same time, the question should be, is this a perfect time to be shorting Tesla? And my answer is, maybe it is, but I wouldn't do it because I still see just enough. The day is young, down 100, but the day is young, and I still see enough residual strength in the marketplace to suggest that the ideal shorting opportunity will come later. Now, will this all recycle, or will we stay in a peak F with a high today of, whoa, opens at round number 210? Watch that round number. Anytime within 3 days, if Tesla cannot get above 210, this is a really serious short-term peak. But at the same time, it did hit 213.29, and so far it's close to the low of the day. So answer you, yes, absolutely. I think you're correct. I would, at this particular point, favor the F over the B in the Chapman wave leg. But the stochastic still at 89% and the MACD is still strong. The big question is this just a perfect time to be shorting Tesla with a stop? Well, it's a little too much for my liking. At 204 with a stop at 213.30. 213, I don't do 10 points. No, if you're prepared to do just a $3.50 stop from exactly where we are right now, that wasn't your question. My situation here is that it's made a leg D in the 120-minute chart. That is showing weakness, and that's suggesting that Tesla should drop under $200 in the next few days if the market doesn't have a rebound. And I suspect that this is going to be, my thinking was, remember earlier from last weekend for subscribers in my opening call, I said my thinking here is that we're going to have weakness early in the week, and then later in the week we're going to have a spike. I didn't know if they'd take out the previous high. Well, we've just done that, and now we're back to the consolidation. This is a consolidation phase, which leads me to the next question. Let me just, so Tesla upside right now is limited to about the 206, 209-ish area max until it does more testing between 202 and 198 is the 9-period exponential moving average. Just for now, but it has had a really nice move, nice V-shaped recovery, gone above the previous arch of 210 high on the 19th. So far, this is not, for me, not yet a short. It might be. I just don't think it's a short right now. That's my thinking. Next question was, if I can find it quickly. Oh, no. Next question was, it came in early. I can't find it. I will find it. SLW. Okay, it was from yesterday. Sorry, SLW Silver Wheaton, SLW. It was holding very well. It had a rogue wave spike to a G at 17.73. It's trading at 16.68, up 19 cents. What to do? I would wait. I'd wait for a consolidation. And I think gold is also going to consolidate right as we speak. I'm going to go to gold as soon as we finish. Oh, we've got Michael in Toronto. Michael, how are you?
Yeah, hi. Can we look at the biotech, please?
Okay, very good. You're looking at XBI. I'll be right back if you don't mind. We'll be back looking at the different biotech ETFs. Basil Chapman with Michael in Toronto. Dow's down 120. We'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're back, and the Dow's down 100, S&P's down 10. So we're on with Michael in Toronto. Michael, do you look at the IBB at all, or just the XBI?
both. But are we on our way to the April 2014 lows, or do you see like another technical bounce up?
So this is a really good question. Now let's just do this. Well, let me just clarify our position here for just for disclosure. In the IBB, which is the NASDAQ iShares Biotech ETF, we've been short for quite a while. And from the high was 1400.79 in July of last year at peak F in the weekly chart. And we got short just really within 3 days, just 4 or 5 days later, we got short at about 393.10. I made the decision that this was not just a short position, this was going to be a core short position, and that even though we've added and subtracted because we've added to it at points and we've taken a little bit of a profit, a little gain, this is a core position with my target in the 220 to 218 area. Now, let me just relate that to your XBI. And the XBI is the high there was a peak F top in the weekly chart, in the monthly chart at 91.11. And it has gone all the way down to 44.16, and it's trading at 49.66. Now, if you don't mind, I'm just going to go back to the IBB. Actually, I should look at the BBI. Why am I forgetting BBI? The biotechs. For goodness sake, why am I forgetting? Is it XBI? It is the XBI. No, it's not. Well, Spider S&P Biotech. Yeah, this is the one that, I used to do all the biotech ETFs and indexes. Then I just, for a while now, I've stuck mostly with the IBB because it just gives me so much information. And this is the one that we've been trading. So what I've done, we made a peak D in the daily from 240.03 on the 9th of February. It went peak A, and then just a modest peak B and a very modest C, and then a squeak to a D. My thinking, and today I did it again, because we've got the short position, if we go long, I go long the 2 times long, the BIB. We took a loss this morning, and we took a tiny 1% loss yesterday. And each time we take a loss, the IBB pulls back even sharper. So it kind of almost negates that little bit of, all I'm doing is I'm saying, if ever the IBB was ready for a rally, this had better be the time, because the general market is rallying and it's failing. That's what you're looking at, right? It's failing when other areas are moving nicely, correct?
Yeah, this is the weakest sector of the entire market, and I've never really participated in the rebounds here. And I flipped from being a bull to a bear. And the issue now is, do we go? Which way? We're obviously heading to the April 2014 lows. The question is it now? Or is there going to be some bounce after Easter?
What instrument are you using to be short? Are you using the BIS?
It's a direction triple.
Oh, what's that? What's the symbol again?
Oh, it's the most dangerous, most volatile triple ETF in the world.
LABD. What is the symbol?
LABD.
That's it, LABD. So the LABD, I'm just going to show it for a moment here. It's in a nice move today. It's up at 65.02. It's up 3.45. I'm going to use the BIS, which is a little bit safer. It's 2 times short. It's only a little safer because if you're wrong, you're going to lose a little less, but it's the same amount of time, and percentage-wise, sometimes it's almost the same. So I've already got this chart. You see this? Can you see the chart now?
Yeah, so the far right one is like is that making a rounding bottom or like?
Yeah. You can't be. A long time ago, I would even say now it must be 7 years ago, something like that. I had in one of my Master Traders series, I had someone who had been a trader, a floor trader at Goldman Sachs, and he and his partner there, the two worked together. They were in the same section. Had a portfolio, and they had a portfolio of shorts. This is just before the 2007 crisis, or just as the crisis was starting, 2007. So when the boss found out about it, was furious. Said, do you know that our clients are bank clients, and we got bank clients, and what do you think you're doing? They said, we're making a fortune. What's the matter with you? He said, that's not the point. So what happened was they got really furious. What?
Are they still employed?
Well, I'm going to give you the story. So the story is that they resigned and started their own trading. And the other partner, not this particular person who was in my class studying the Chapman Wave methodology, the other person went short this was at the beginning of when all these inverted and regular ETFs were coming out. He shorted the longs and the shorts. And he said, have a look at these things. The longs go down and the shorts go down over a period of time. And why is that? That's because of the recalculation at the end of the day. That's number one. And number two is it's also the makeup of these particular ETFs. The best one is like if you go 1-to-1 like the DOG, which is the 100% short the Dow, or the SH, which is 100% short the S&P. Those seem to be pretty darn good mirror images. So yeah, let me show you. The chart that you're looking on the right is the monthly chart of the Pro shares. And I'm going to squeeze this so that you can see something. You won't believe it. This, back in 2010, it was trading at 1712.36. It's trading today at 46. So you got to be careful. You can't hold these things for a long period of time. They tell you these are trading vehicles. Although sometimes we've just held one a 3 times long Dow for quite a while, in a week or two, and it's done very, very well. Now let me just go to this. The way that I'm looking at the BIS, because you're absolutely correct, the biotechs, in which I've been talking about for over a year and a half, are looking as if when they make their top, I said, this will be a top of absolute consequence. Why? Because of the overspending, because of the lack of money management, because of now you've got politics behind it. You've got almost every politician is going to start talking about the high expense of the drugs. So the wind has just completely changed. They could do nothing wrong. Let me just show again. Look at the way the IBB went straight up. No, it had one little hiccup back in 2014 for about 2 months, and that was it. It said, I'm done going down. I'm going to keep going up, and it went all the way to 400.79 from about 100 just a couple of years before. Now I think the tide has changed. I'm with you. I think that this is a very good opportunity now to stay in your short position. Today and yesterday were the perfect, ideal opportunity moments for the IBB to have a rally. It couldn't take that rally. It's pulling back. The IBB is down 1.81. I think even if there is a rally now, it will be fairly contained. So you've got to be careful for the reflex rally. That's all I'm saying. But as a trend, my target for the IBB would be the moment it breaks, and it might take a little while to break, but the moment it breaks the support at 240, my target is this candle of the 4th of April, 207. So 220 to 207 would be my next downside target for leg C, or if B might continue. So I'm with you. I think this is one of the 207, yes.
That's
for
April
the
2014 lows?
It'll take, as soon as it takes out that low. Oh, hold on. I don't want to rush this. We'll talk about that as soon as you get back. I'll show you what I'm looking at.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're just going to finish up here with Michael in Toronto because we were looking at the XBI, which is the SPIDER S&P Biotech ETF. It has the same look as the IBB. So this is what I'm looking at, Michael. Let me just grab the 120-minute chart. There is just a moment here of support in the XBI at 49.90. If, in fact, 49 goes in the next between now and tomorrow at 4 o'clock, then there's a real good chance that at least you're going to test on the downside the 47.78 low of the first, and then the 46.49 low of the 24th. That's going to be really important because you could be using a sideways move here that says, I'm not going to break down just yet. I've had a massive decline. There's still enough buying, but not enough buying to really break out, but there's enough buying to give support. And then we will go from the H, the lowercase h pattern. You know that I always look at the lowercase h, and then it goes to a lowercase m if it holds well. So that's the best case scenario I'm seeing right now, that the H can go to an M. The worst case would be if, in fact, it takes out in the next 2 days, it just doesn't have any strength whatsoever, and the general market does pull back just to take a breather after such a nice big move. And, in fact, it takes out, the moment it takes out 46.49, you're looking at the low of the 9th of February at 44.16. That is going to be really key. The way I'm looking at it now, I think that you're going to get more time, that the best of the down move might be just another 1.5, maybe 2 points, and then it bounces in a range. What I would do with you, I try to keep a core short, and I'd be trading on the short side, and I'd even trade on the upside, but I'd keep putting on the short side, taking off a point or two, and just building up a kitty, because it might take until April before it really breaks down. I hope that helps you.
Yeah, see, Standard & Poor's has scheduled a rebalancing for the XBI on March 21st. Okay.
Oh, okay.
So how does that play into it? I mean, if I'm a hedge fund or a mutual fund, I would be front running, right? Wouldn't I be buying the stocks that are going into the XBI?
Right. And I'd be getting out of the ones that I think are going to be eliminated. So I'm just going to use the actual index for the moment without overthinking it. Those are my parameters. On the upside, just be a little careful that if 52.35 is hit, that's part of this H pattern that goes to an M. That's all. But the short side in the bigger term, longer term, that's the way I'm staying, and I'm going to stay in there as long as I can. Thanks so much for calling, Michael. Good luck.
Thank you.
Thank you very much. So, folks, a couple of questions I had, really an important question. I'm going to deal with it tomorrow. Question is, I know you just said you're thinking the better shortable top might be in next week instead of now. Do you mean that is finally the top, longer term best starting, or are you still thinking big coda after the correction? I'm going to deal with that tomorrow. I don't know why it is. It's just sitting in the back of my head for I don't know how long. If you saw the last episode of Downton Abbey, if you ever saw that, whatever her name is, interviewed the lead character, what's her name, whatever her name, she said, I have a wardrobe of 153 gowns, and my maid has just 2 in black. I think we still have to go to this Downton, this era of white hats, white shoes, bow ties. The sartorial look needs to come in. The bigger, better phase. I think for some reason, I don't see how we can make a major top without something like that occurring. All right, I'm off that subject. Okay, let's go back to our markets. There was a question as to, I want to get to it. I wrote it down. Would I look at VNQ? VNQ is, in fact, Vanguard REIT ETF is trading at 79.22. From the doji low that it made, VNQ is trading at 79.23, down 47 cents. This is A. B, I see no reason why it shouldn't make a C at this particular point in the daily. Make a D. It's made a C, and the D would be very close to a V-shaped pattern to retest the top that was made on the 30th of December at 80.91. In the meantime, it's gone down to the 71 area. So this is a huge move to the upside. What's important is that the weekly chart is forming the H pattern with a lower low, but closed above it, which says you can go to the previous peak of importance. It's done that. If you take that out, you can go to the next peak of importance, which is the one we were talking about. That's 80.91. So I like the action. Would I be buying it now? I'd prefer to start a small position at 70, if you can get it. It's a 78.90, and see how it holds the whole 78.90, and see how it holds the 77.90 to 77.50 area. That's the way I'm looking at it. And I can only go one step at a time here because it was an IPO. Oh, no, it goes back. I can do this. That goes. So this is A, B, C, D, E. So that's gone to an E. I quite like it. I don't know if I'd have a full position, but I would definitely be starting a small position in that area, and I'd have a fairly tight stop. Hope that answers your question. The moment it takes out 81.30 in the next 2 weeks, if it does, that's really positive action. Then it should go all the way to the left side high that was made in October of 2015 of 81.77. Breaks down under 77. 2 points down, 2 points up, really important in the stock. That was that question. Another one that was, Apple. Apple's part of Apple. So FANG. Apple's part of the FANG group. I was asked about that. Well, it turns out that this is a rally that is kind of commodity related in a way, mostly commodity related. But at the same time, what we're looking at is that there's a rotation going on. The reason why we've raised stops, today we got taken out of 4 positions. One with a small loss, one with a second time. Yesterday was partial. We got taken out, and today we got taken out again for the core position. And I believe, I don't want to talk out of turn, yes. And that means that we've got some nice gains. They were fabulous gains. Now they're good, very good gains, but we're out. That's the way I'm doing it. I don't mind being taken out because I've seen so many other stocks that are really interesting on the long side. On the short side, I just want to double check something. Yes, and now we started a position at 266 in one particular stock, and it's holding really nicely. And this stock is going to be key to a number of analyses, outlooks that I have. So this is the way we're dealing with it, trying to be very selective, while at the same time going to areas that we haven't been in for quite a while. Now, boy, that's very exciting. I mean, there was a 40% gain in one. Now it's a little bit less because it pulled back a tad. But nice. I can't complain. Apple. So Apple is struggling. it's holding this 9-period exponential moving average. And we were talking about it the other day, and I had said to the caller, I said, just be careful. If it goes under 99.70-ish, I would be taking something off because it should be making a leg D. It doesn't have to because it's underneath all the major previous highs. So this is called the counter trend rally. But the MACD is good. Stochastic's still okay at 78%. Apple should try a little bit harder to get above the 103.75 level. But it's not my favorite stock at all. But if you're in it, I would be holding it and just seeing if it's able to carry through. Netflix, NFLX. Netflix is trading at 97.12, down 90 cents. It has made the PE. The MACD is holding well. Oops, way up. Got another break, and then we'll be in for the final segment. And the stochastic's down to 67. So Netflix is struggling. Google, I'm going to Google because I like Google. Google, actually not doing too badly. What am I missing? Fang, Apple, we just did. I've done them all. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. I think what I'd like to do right now, I've answered a couple of questions in the den. I've checked out there. Some questions that I can deal with tomorrow. I'm about to sneeze. Am I about to sneeze? No, I won't. I'll just press the schnoz right there. And that'll do the trick. Okay, we're going to go to a couple of things here. Let me just run the indices. The Dow, INDU. No, wait, let me just show you this first of all. Let me go right here. This is what I show my subscribers every day. This is what we were discussing. And I said, if ever there was an opportunity to turn down, this is kind of the area with the 200-period moving average could go to E, but if it pulls back from here, the 9-period exponential moving average support at 16,000, right there, at 16,008, somewhere around 870 is very important. Today's low has been 16,850. So we touched it and we're just above it. And that's saying, you see the patterns that I'm looking at here? Look at this. You've got the cup pattern, left side, right side, price, time match, went right to the 17,099 area. Now you're starting to look. I drew in the fighting patterns of the cup, and there's the arch formation. And I drew it in yesterday to show that this is the pattern. We hit it exactly, that rounding top. Now we should have a little bit of a consolidation. I don't know how much of a consolidation, because when you have 1, 2, 3, 4, 5, 6, 7 candles, very narrow candles, considering the huge candle of was that the first? Yes, the 1st of March. This is really a normal consolidation. You don't have to be listening to the news or anything. You look at it and say, hey, nothing wrong here. You wouldn't even know that Draghi spoke. So what I'm saying is that the MACD is still good. The stochastics pulled back to 89% from the 90s. So this is something to watch. But so far, the technicals are suggesting that rather than an arch formation, we're having a consolidation, but it must be no later than Monday, Friday going into Monday or Tuesday morning at the latest, that we should see a test of the high. Today's high of 17,130. If 17,000, in fact, if 16,800 is taken out, then we're going to go, do you remember 136? Then we're going to be looking at a possible 3-day consolidation. I still see enough buying in certain areas. I'll be a little overextended. Yeah, that's what I've been talking about. A little overextended. That's why we raised the stops in our long positions. And it's fine. Take a profit and we'll be back. And I haven't yet started to really look at the short position. I will be looking at the short position very soon. But at this particular point, so far, I still see enough. I think most fund managers, the entire month of March, have just missed everything on the upside. It's been too quick. When they got in, it suddenly pulled back. They got nervous. They got out. I think there are a lot of buyers left. This is just my thinking. The proof of the pudding will be how we close today. If we can get back some of the losses and close much nicer at minus 35 on the Dow, minus 3.5 on the S&P, I say nice. That's much better action. And then tomorrow mustn't see a massive 300-point decline. It needs to just be a nice, easy, unchanged type session. Okay, enough with that. Now let me quickly go through this. We've got a minute left. Here we go. So I want to go to the QQQ series. Made a peak F. Yes, from peak F, you've got to be real careful. It could be an alternate count, but we won't know. I can just tell you this, that if the QQQ series goes above 106.35, the high of the 4th, that's recycled, and I'm anticipating we can go to the 200-period smooth moving average of 107.90. Let's go on. We're going to go to the IWM. IWM at the best move of all, going to a peak C. Will it go to a D? And I've been asked that question about Twitter and other stocks. You know, this is a way better pattern than something like, well, I won't go there. I'll go there tomorrow. This is a way better pattern because the MACD is just flattening out. Stochastics pull back quite sharply, but that monthly chart is saying, hey, there's some enough internal strength as long as IWM, the Russell 2000 ETF, does not break 104.60 in the next 2 days. Well, let's just, as we're about to sign, if you're about to go for your swimming lesson, enjoy it. Let me do this. The VIX index, the VIX is only up 17 cents at 1851. If the VIX by the end of the day breaks into the 1930s, that's another story. If the VIX falls to the 1830s to lower than that, fabulous. I love that kind of action. Folks, I'll be back tomorrow. Have a wonderful day, and thank you.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.